In this video, I'm going to talk about the popular exchange-traded fund offered by iShares called Global Clean Energy. I'm going to tell you what the fund aims to achieve, what the top holdings are, if the fees are too high, and whether you should put this in your portfolios right now. Firstly, this fund is run by iShares, which is also run by Blackrock. Blackrock are the world's largest asset manager, and they manage over $7.4 trillion of assets under management. Furthermore, this is an exchange-traded fund, which means it liquidly trades on the stock market and it will actively change its price throughout the day. This is not an index fund that will be updated once a day at 12 p.m. Furthermore, this actually buys a collection of different equities or asset classes and you can invest into that. However, to start off, 99% of this is in equities and is about a 1.1% cash position. So what is the iShares Global Clean Energy Fund and what do they aim to achieve? Well, this fund is a collection of the top 30 or biggest global clean energy companies by market capitalization. Therefore, they aim to track the performance of these select companies, assuming that they are pivotal in the developments of clean energy, and therefore investors looking to benefit from this trend that they may perhaps think of in the future will therefore buy this ETF and likely benefit if we do progress more into a cleaner energy society. So this exchange traded fund is aimed at individuals looking to either diversify their current allocations or use it as a hedge in their portfolio. Perhaps they feel that they have a little bit too much of other sectors and therefore they can boost it or bolster it with the clean energy fund that they can leave to the side and sit. And seeing how everyone seems to believe in the clean energy developments and how we will be moving to a more sustainable and renewable future, it's no surprise to me why investors have such a high popularity amongst it. And if you're interested in kickstarting your investing, why not sign up to Trading 212 using my link in the description down below and get a free share worth up to £100. They are, in my opinion, the best stockbroker as of currently, and they are the best commission-free broker available in the UK. So if you'd like to get ahead with your investing and get a share worth up to £100, then please click the link in my description down below. Thank you. However, I believe that when investing, you truly need to understand your investment as best as you can. So I'm going to take a look at what the holdings are and what the weightings are so that we can understand our investment and hopefully outperform the general market. You may be surprised to hear in the Clean Energy Fund that only 2.65% of this is taken up by energy companies in the sector. Furthermore, you may be more surprised to hear that 41% of this total fund is made up by technology companies. It's not as bad as it sounds though, as these technology companies are likely on the forefront of developing new clean energy solutions, and therefore it does make sense to me. And they're likely very innovative and developing new forms of energy. However, what is a little bit interesting is that over 40% of the exposure of this portfolio is in US equities, which does sound like quite an exposure, but then if you compare it to the global markets and the capitalization of the US, they actually take up 44% of the global stock market, and therefore it would be underrepresented in this fund. I'm currently in the process of taking apart that computer and swapping things around. There's dust in the air and my voice sounds all croaky. I'm not ill, and that will be cleaned up hopefully soon. Anyway, as a stock picker, I'm more interested in the individual holdings aspect of this. So therefore, I'm going to look at the top 5 holdings and their weightings. What is interesting to see is that the top 5 holdings in this fund make up over 34.8% of the total ETF. These companies are Solar Edge Technologies, Plug, Sunrun, Enphase Energy, and Zinni Solar Holdings. A majority of these companies specified are companies with earnings and profit margins of well above 10%, with the exception of 2 of these companies. These 2 companies are Plug, which is currently very unprofitable and hasn't made a profit in the last 6 years, and Sunrun, which is currently just about breaking even, although just ever so slightly under. However, what I shall mention is that for all five of these businesses, that the revenue has been increasing at quite a considerable rate across the board. Furthermore, all of these companies have excellent balance sheets, with the exception of Sunrun and Plug, which have good balance sheets but much higher debt debt loads on them. So the only company that currently pays a dividend is Shinyi Solar Holdings, and they only have a dividend yield of 1.4%. Therefore, since a majority of these companies don't pay dividends, I would largely suspect that the dividend yield of this fund is likely not worth investing for, and therefore it's not an income stock for investors. The biggest downside for investors looking to invest in this exchange traded fund would be their valuations. If that person is a said value investor, they likely don't like to see that most of these companies are trading on very high price to earning or price to book ratios. However, I would like to disagree with this. I believe that the higher the price to earnings or price to book means that investor sentiment is therefore higher, and usually this is a good thing as investors are more willing to pay higher amounts of money for less earnings in the stock. It's also worth mentioning that historically all 5 of these companies have generated shareholder returns of over 250%, and the top 2 have even given 1,200% and 2,600% respectively. I personally think that the top 5 holdings in this fund and their allocations are quality companies with the exception of a few. My only concern would be with Plug, as they haven't been profitable and therefore their track record would likely be of more uncertainty to me. But at least all of these are growing at very fast paces and therefore in the future likely will be excellent growth stocks. Regardless, these holdings give a nice balance between quality companies and high growth potential. So now that we know their holdings and their quality of the holdings, what about their fees? Because if the fees are too high, this could eat into an investor's returns and therefore drag down their performance overall in the market. Well, this iShares Global Clean Energy Fund has a fairly modest fee. They charge an ongoing charge figure of 0.65%, which you'll likely not notice in your time investing in this fund. This is because it is subtracted in every single trading day from the share price in very small amounts. Therefore, you will very likely not notice this and just assume it's market volatility. But regardless, when combining this 0.65% fee with the target of inflation, which the Bank of England goes for 2%, this is 2.65% that you would have to remove off of your overall performance. So how is the performance historically, and has it performed better than that so that you would still be getting very impressive returns? And in fact, this really depends on your perspective. If we look at year to date, or this means that since the start of the year, they've generated returns of over 81% on the share price. However, if we look in the last 5 years, they've had an annualized growth rate of 22.23%, which is still really impressive. For a measure, the S&P 500 in the last 10 years has generated 13.6% annualized returns. But then if we look at the 10-year returns of this exchange traded fund, this is where it's lacking, and currently it has only generated a return of around 6% annualized returns. This means that whilst yes, in the last 5 years it has vastly outperformed it, prior to that it hasn't, and this suggests to me that this could be an issue for a long-term investor. In my opinion, with interest rates at all-time lows, this leads to investors buying more equities as their money doesn't do much in cash or bonds. Therefore, more retail investors will likely be looking into more sustainable and ethical investments simply because that's what a beginner investor usually looks for, and they'll likely place their money into something of these companies or this fund, and that would be the build-up of performance. And therefore I feel that it may likely outperform the general markets for the next few years or the medium term, but perhaps over the longer term this could then start to step back a bit. But at this point you could then justify the modest fees and inflation and take quite a nice profit whilst also beating the overall market. However, this isn't an exchange traded fund that I would be actively looking to include in my portfolio. Obviously I don't invest in funds at all, I'm a stock picker, but regardless I wouldn't add this for a few reasons. That's because the majority of this is tied up in US assets. I'm not that bullish on them. With the dollar falling, it's cheaper, more people are buying these stocks, the Fed pumping stimulus into the markets, US stocks are all-time highs. Yes, sure, this could continue for the next 5, 6, maybe 10 years, but eventually this is going to become some reality and drop back down. Also, the technology involved in cleaner energy are perhaps more newer, therefore whilst at the moment they might be providing excellent energy yields, perhaps a few years down the line they're just not usable for energy, and therefore that's a lot of risk as they perhaps give lower energy yields and therefore they have to be written off. At that point, the company that perhaps is in this fund will therefore remove a lot of shareholder returns, especially if it's one of the top 5 holdings in this fund. But I also feel that this price is held up by speculation. That's due to the US presidential elections and currently a short-term impact to this stock. That's because it seems like people believe that Biden will be winning and therefore he's going to have a more clean energy motive. But what if Trump wins, for example, and then this stock sees a large sell-off? And therefore, I wouldn't look to actively buy at this point in time, at least for short to medium term value. And that goes in with my point. If you're investing with a time horizon of around 5 years, this likely isn't the kind of investment you'd like. It's very high growth, it's mid-cap related, and it would likely be very risky for you. Same applies if you're in retirement. This doesn't really draw a high income. As I said, only one of the top 5 holdings actually has dividend yield. And especially because it's high risk, you really wouldn't want to have this in your portfolio for retirement unless you have a really high risk tolerance or that's your small allocation to high growth equities. And speaking of these top positions, whilst the majority of them are profitable, some aren't. And this trend could likely continue. And this goes against my investment thesis. I like to invest primarily for dividends. Therefore, I look for companies that have got quality earnings growth, higher than average profit margins, companies that are able to have a resilient balance sheet and low debt loads. I also like to look at where they can be in the future, and whilst I do believe that sustainability, clean energy, renewable energy will much be a trend that will be increasing, this may take 10, 20 or even 30 years to make this full transition and to see these stocks fully benefit from it. Also, these technologies are fairly new and this could make it very complex for a potential investor, and therefore if you don't understand your investment, that makes it very difficult to have conviction of when to buy or sell. What do you think of the iShares Clean Global Energy Fund? Is this one you hold in your portfolio, or will you be watching this for the next few years? And if you're interested in my Vanguard Life Strategy Fund review, then click the card at the top right of the video. Thank you for watching. I'm Osborne Foreman. Have a good day.